Welcome everyone to this new panel on consumer applications. So I'm the moderator today. I'm Xavier. So I'm founder and CIO at Frachtis. It's a new crypto VC fund focusing on the pre-seed stage, primarily investing in decentralized AI, infra, middleware, as well as consumer apps. So more news will be announced on that one soon. And I'm with some wonderful panelists today. If you'd like to go ahead and introduce yourself and what you're working on, please go ahead.
Hello, so my name is Matsubara. I'm running the layer one blockchain, which is called Oasys. Started from Japan, backed by a Japanese gaming company, and also gaming, financial giants from Japan, like Sega and SBI. We launched at the end of the 2022. Then we onboarding the financial and the gaming apps and Oasys. Yeah.
My name is Tim. I lead global strategy at Mantle. Man, not a lot of people. You're missing the alpha here. So, look, I think a lot of ecosystems build very horizontally, like Android, and we're taking a very different approach. We are building much more like Apple. We are backed by the largest treasury on chain. We have about $3.5 billion worth that we are curating top down, finding the best opportunities in the ecosystem, what's broken in the value chain, and we will either build it ourselves or partner with someone. And so we built the likes of the L2 network, which is about 34 billion FDV, METH, liquid staking, about billion FDV, Function BTC, 1.2 billion FDV, or we'll partner with key ecosystem partners like Ethena, Ondo, of which we were early in instrumenting their early successes.
Hi, my name's Chris. I'm a partner at TenSquared Capital. We're a VC fund investing in the blockchain space. Our investment thesis is that the next wave of blockchain adoption happens through existing distribution channels with companies that have tens of millions, hundreds of millions of users. So our investment team, we're looking to serve as a bridge between crypto founders and business executives of Fortune 500 companies.
Yeah, I'm Steve McKeon. I'm founder and managing partner of Collab+Currency. We're an early stage venture fund. We've been at it about 8 years. We've done about 150 deals across practically every vertical. So happy to compare and contrast some of the infra and consumer stuff and AI stuff that we've seen. Offices in New York.
Cool. Thanks, everyone. So, I think consumer applications are definitely talk of the town right now in crypto. We're seeing a lot of institutions come into the space, but there's also a lot of opportunity right now. I think at the consumer app layer, there's a lot of catalysts sort of enabling this right now. So I wanted to kick off the panel just by starting with, I guess I call it the mobile moment. And by that, I mean, obviously Apple has scrapped the kind of tax that they were charging on in App Store payments. We don't really have many major mobile apps right now, and crypto now seems to be the time to build it. We have a good mix of VCs and protocols here. So, we'd love to hear some views from VCs as well as protocols, how you're sort of capitalizing on this moment right now in crypto.
Me? So actually, the adaption of the adaption of mobile is important for the layer one chain from protocol side, then, and also the kind of Apple regulation was so impossible because we recently onboarded the first game with Sega, the gaming company, who's really famous about the Sonic the Hedgehog. Then the payment through still it's a Web3 game, but 70% of the payment was still it's paid by Apple and Google. Still, even for a crypto game. So think the new regulation, I think the deregulation of the Apple or payment policy would be very important for the kind of consumer application. Yeah, I believe so. Maybe we can live together with the Apple and the Google.
I think it's a bit of a misperception. I believe, and by talking to some folks in the industry, the Apple tax goes away. That's more beneficial for guys like Epic Games and the big mobile game developers. Not so much for crypto in this sense. I don't think it really changes things that weren't already there before. But if you guys know better than me, can double check. I'm always puzzled by how Moonshot gets around with it. So, if you guys know the secret sauce there, I'd love to chat. I do believe it does come down to the mobile app moment, right? And I think one of the things we're building at Mantle is we're building a crypto neobank. So two things on why this is different. One is everybody else either has a card or they're a self-custodial wallet with a card. That's only a one-way off ramp, right? That allows you to spend your crypto, but doesn't allow you to top up. And you need the top-up side, piggyback off of the last panel, to solve the retention loop. You need a way for people to keep bringing capital into that piece. And so, okay, well, we have this, but why are mobile apps important? Well, if you look at how crypto tech adoption happens in S-curves, and the first wave was onboarded through trading, right? Coinbase, etc. The next wave, they don't want a trading experience. They need something as familiar, simple to understand, but it has to be a form factor that they trust, right? So mobile app, banking application, you want to have like a Revolut UI UX on the front end, DeFi in the back end, abstract away, compounding on your dollars. So that's why we think mobile apps are important, and that's also the way we're moving towards.
Yeah, I agree with a lot of that. I think last cycle there was a lot of infrastructure investments, which helps this cycle's consumer applications. Specifically on mobile, I think a lot of abstraction around both creating a wallet and then payments for or whatever you want to do in game or in app. I think that's a major moment. When I think back to last cycle, a popular app, Step In, I tried convincing my friends to get on it, and they were interested in the idea theoretically, but once they figured out, you get to make a wallet, you separately have to go and buy the shoe NFT on a separate exchange and then send it to your app. The drop-off rate for people who actually went through, I think maybe one guy did it out of 15. I think of the 15, like 7 or 8 were interested to try if they could have just done it all in app.
Yeah, I think with regards to the Apple tax specifically, it's like big if true, right? So if in fact this does sort of unlock, I mean, it has been such a huge choke point. It's been such a source of friction, right? So you either had to like sideload the app, which created friction because a lot of people couldn't figure that out, or you had to completely neuter the app. Like you've got an OpenSea app where you can't buy anything, right? And so if you can kind of like relieve that, it's going to give permission for like a lot of the stuff that's already out there to start integrating payments, purchases, all of these things directly through the app experience. It's also going to help discovery, which has been an issue in crypto for basically ever. But it's also, I think, it's within the broader context of like we have these regulatory changes, we have the App Store potentially opening up, and it's just giving permission, to what you mentioned earlier. Like there are a lot of platforms out there with tens of millions or hundreds of millions, or in some cases billions of users. And if we can get them to start integrating crypto features, even if the user doesn't know it's crypto, but integrating some of this Web3 sort of features that can only be delivered by sort of immutable databases and interoperability in the background, that's sort of like the unlock moment. And so I guess that's the way I look at this Apple tax. It's like part of a bigger context of things that are just giving these larger companies permission to experiment with Web3, and that could be a huge unlock.
Yeah, I completely agree with all of you. And, just in general, I think the moment right now, infrastructure is here. We have the Apple App Store sort of removing some of the tax. And it kind of feels like right now is the time for some breakout apps to occur. To your point, Steve, I think usability and discovery in crypto have been major issues and problems for a long time. And it kind of feels like these problems are being solved, which I think is acting as the catalyst, for this next wave of consumer apps to come out. So I might actually start with you guys at the end this time. So Steve, starting with you, you're one of the most prominent consumer app investors in crypto over the years. I'm sure you've got your own ideas right now in terms of like breakout categories of apps. You're seeing, Moonshot, Pump Fund, more recently, Believe app, all these kinds of consumer apps. It's very clear right now that there is demand for these. So I'm curious actually to hear, do you have any kind of theses right now around where we might see some breakout apps? And we'll start with the investors at the end.
Sure. So, there's this saying that like people only adopt apps for 3 reasons, right? Love, money, or fun, right? So either you're trying to find a mate, you're trying to earn money or save money, or you're looking for some sort of entertainment value. And so with that sort of framing in mind, like, look, crypto may not be as useful on the love side, maybe decentralized dating or something with AI or whatever, but certainly on the money side and on the fun side, we can hit those really squarely, which is why you've seen things like Pump.Fun Breakout, right? It's providing entertainment value. It's effectively a financialized game. And B, it's providing fun, right? It's fun and basically like you can earn a profit. And if you look at like speculation, like Coinbase is a huge app, Binance is a huge app. Those are not necessarily decentralized apps. But if we're talking about consumer apps, Some of them are going to be dApps like a Uniswap, an Aave, or whatever, and some of those are going to be centralized, like Coinbase has got 100 million users, Binance has got 200 million users. Those are huge consumer apps, right, that have been sort of like proven out. And it's because they're hitting both the entertainment side and the earning or speculation side. And so I'd say like those are definitely the pieces. Like when we look at crypto games, or we look at some of the decentralized social stuff, or we look at DePen, like look at DePen. What's the motivation behind Helium? Well, if you can have a cell phone and it costs you $0, that's the money motivation, right? Like what's the motivation behind Hivemapper? Well, I can stick this thing in my car and now I'm like earning money passively. So like if you go back to those three motivations, I would say that's kind of like where we look for the breakouts. And then it's really just standing on the shoulders of giants. Like what is uniquely possible right now?
For me, for our fun, I think we're pretty excited about gaming. Saying this time it's different is dangerous, but it does feel pretty different this time. I think when you think about gaming, the development cycle takes a while. So if things started happening in 21, 25, 26 isn't unreasonable for actual games to start launching. And then when we think about millions of users, that's another logical place to look. You have big games with hundreds of millions of monthly active users. And I think the big difference in how we like to see the games being built and companies will invest behind is not everything has to be decentralized or built on chain. You can have 75, 80% of the game off chain, has some parts of the in-game economy, has certain assets that are put on chain. That makes for a better overall experience for the users. They have the potential to earn money. They don't have to earn money. Studios get more valuable data about their customers. So it's a win-win.
I got lost in Steve's framework, so that was really good. But what was the original question?
The original question, I think now focusing more on the protocol level, you mentioned you were building an app right now, sort of neobank. You're choosing a neobank for a reason. I assume you imagine that's where the biggest opportunity is right now. As a protocol developers and or on the ecosystem side, do you see neobank right now as the biggest opportunity right now on the consumer layer?
I think there's like ultimately as a project 2 ways to make money. You either make money off transactions or interest because you have a high TVR AUM. And so neobank onboards a new set of users that you can monetize off both, right? And it's proven that there's product market fit, and you're just iterating it a little bit, which is adding a DeFi native yield to the stack. And therefore, instead of earning 4% of treasuries, you can earn something more. To Steve's point, I don't know about the love piece because that's new to me. That's fresh. But I think ultimately for tokens, people do seek profits. They want to earn. So ultimately, what you're really selling is just volatility, right? The products with the most volatile will attract the most users' eyeballs.
Actually, I completely agree with you. So, and we have the big consumer app like on the Binance and the Coinbase, but there's a huge gap and between the traders, the traders and DJ guys and in Japan too. So we recently, maybe a few months ago, we onboarded Japanese version legal Panelists fan. So the user was almost 100% DJ guys. They came from Twitter, the tweeters, the X. So none of the ordinary guys, so the normal guy didn't come to that the platform. So the gap between the CX, like a regulated CX, so they don't use Binance. So maybe the Coinbase or Robinhood should be there. Is still huge. So then think they can trade, but how can I say, to use that as a utility, it's really hard to get a crypto in their wallet still. Maybe we should work together with the regulated CX to, how can I say, promote the consumer application together. So that'll be very important for all the adoption of the consumer apps, I think.
Yeah, I think, all great points. And I want to take it back to 2 points in particular, some of the VCs just made then. So I guess the first is around gaming. I heard it on the last panel as well. Gaming hasn't really broken out yet in crypto. Many large VCs have strong theses that it will break out at some point in time. MapleStory launched, I think, yesterday at a multi-billion-dollar valuation. I'm not sure what the metrics are on that right now, but they launched a token. sometimes I think about at the consumer app layer, many of you mentioned, some of the biggest consumer apps today are actually centralized. So Coinbase, Binance, these have hundreds of millions of users. So I want to start with the VCs again here. Regarding investing in consumer apps. So, with M&A activity picking up, you're starting to see major acquisitions from, large crypto companies in particular. Do you think, if you're investing now long-term, you see these consumer apps being acquired, especially if some of these have centralized elements? Do you expect consumer apps to be predominantly centralized, or do you see many consumer apps going the pump.fund route, which is like maybe launching a token or potentially capturing all the revenue for themselves through equity, basically? So yeah, I find as an investor right now, it's quite hard structuring some deals because it's hard to know if this will be a token or a equity exit. And consumer apps, I think it's even more unclear, at least for me right now. So I'd love to hear how you guys are thinking about exits in consumer apps long term.
Sure. I think a lot of acquisitions make sense. When we invest in consumer applications, oftentimes we see on the cap table a lot of strategics. On sort of the traditional Fortune 500 side, American Express, Warner, being on the cap table and they're actively using the product. I think we're not investors in them, so I'm just using them as an example. But a company like Blackbird, previously the founder founded Resi, which American Express acquired. Like that's to me a very logical example of how a lot of these companies will play out because they're already working with Fortune 500 companies. If they see users actually come in through these decentralized channels, they'll want to own those businesses.
So I guess on the topic of M&A, and really just thinking about staging, right? Like you'll often see, I guess like this stuff happen in infra before you see it at the app layer. And I mean, I'm old enough where I remember like when the internet was breaking out, right? And where did value accrue at the beginning of the internet? It accrued with like ISPs, right? Like if you remember AOL and CompuServe, and like these were like the names that were like hot and accruing all the value. And early in crypto, you've also seen like a bunch of infrastructure type acquisitions, right? So Coinbase bought the Collab fund position in Tagomi, right, which became Coinbase Prime, which was kind of like this sort of like trading infrastructure. They bought Bison Trails, which again was infrastructure, right? It was like staking. And so you've seen like you've seen this start to happen around infrastructure already. And I think, but again, just like with the internet, like we had all this infrastructure stuff in the late 90s, and then you had Facebook, and you had sort of like these killer apps that came out more like in the early 2000s, maybe 5 to 8 years later. And so that's sort of a similar progression that crypto is going through, where we're like just starting to see the apps sort of like have a moment where enough infrastructure has been built to sort of like deliver some of these things. And like, no question, you're going to see consolidation. And some of this is going to be like large gaming companies are going to see the writing on the wall and they'll start acquiring games, if nothing else, just to learn. Right. And like large financial companies will start seeing the writing on the wall and they'll start. I mean, you just saw this like Robinhood buying Bitstamp. Right. Again, Bitstamp, basically a consumer app effectively. And now it's sort of like supercharging Robinhood's earnings and the acquisition of Deribit. So I think we're starting to see this stuff at the app layer. It's more kind of like centralized apps that are being acquired, because how do you acquire a decentralized app? So I think that's like the tricky part, is when these things are protocols and can't really be acquired. Like that sort of changes the traditional playbook around sort of like how you bolt things on.
Right. So, speaking of protocols, back to you guys. We'd love to learn from you two in particular, regarding sort of value capture. Infrastructure traditionally has captured a lot of value. Applications now coming out, Mantle kind of infrastructure in the past, maybe more building consumer apps now. I'm curious, you have a chain, you're building Mantle, a very large ecosystem. Where can you see value being captured sort of going forward? Is it more at the app layer? Is that why you're sort of looking to build these apps, or do you also expect some infra to capture some value going forward?
I think it's mainly infra right now. Steve's point, like I've always thought crypto makes sense to acquire the infra level because you're turbocharging. It's a lubricant for existing businesses, right? Like Stripe and Bridge, case in point, very clear. The challenge with if you acquire a consumer dApp is if they already launched a token, the users are there for the token. And generally in the Web2 space, I was a Web2, 3 VC in my past life. You generally make an acquisition because you think it's strategic or your cost of user acquisition is lower by just buying that company out. And this is not the case, right? You're just buying an empty shell with like sell only pressure on the token. So it doesn't really make sense. It's harder from that perspective. From our perspective as Mantle, as we build out these different products in our suite, we absolutely are looking at infrastructure plays that would solve for different pieces of that stack. We have made some, we haven't announced anything, but we are moving that direction. That being said, I'm always very curious about like, can we do some P-style activity in the space where we find communities and projects that, are kind of dead, but maybe we can buy them for cheap and rev them back up, right? I think we're always open to ideas, so happy to jam with people.
In my point, the acquisition by the huge conglomerate who has financial function might be very important. I think the Mantle has a lot of touch point with the Bybit, I think. Then, even for, the Asian, the infrastructure, like the Kaya, they have merged with the Line. So Line has a lot of financial function. Also, and also Sony recently, started to partner with the Acer. And the Sony also had a Sony Bank. Their financial or revenue is the largest, I think, now in the Sony group. So even as we started to work with the SBI, so it's not a complete merge and acquisition, but it's it's starting from partnership and investment. But the similar thing that's going on and everywhere, I think the merge and acquisition and or partnership with huge and conglomerate which has financial function and users. So that will promote the how can I say the a lot of the touch point adaptation to the mass users.
Cool. So I want to pivot a bit and take it to AI actually within consumer apps. So I have a bit of a thesis right now that personalization will come to consumer apps within crypto, and I think models are being built now, that are stored sort of decentralized on chain and fully verifiable, and potentially in future applications that have a model that they're fine tuning. The more user data that comes in, the better the model gets. The more they know about the user, the better the experience gets, etc. There's a flywheel there. So I want to start with VCs, especially you in particular here, Steve. I guess you've seen it in Web 2. Some of the major players have, they call it hyper personalization now, and AI is obviously a big part of that. We haven't seen it in crypto yet. Do you think that AI is coming to the consumer layer? It's barely there on the infra layer right now as well in crypto, so it's super early. But how are you seeing that space playing out?
Yeah, 100%. So with all the work around consumer that we did in sort of 2021 and 2022, we saw the writing on the wall around AI very early. And so we've actually been like one of the most active investors around decentralized AI over the last 2 years. We've done about 15 AI related deals. And again, it starts with infra, right? So like we broke down the infra stack. We're like, all right, we all know ChatGPT, you type this thing in, you get an output, but like what's under the hood? And it's like 15 layers, right? So it's like data collection, data scraping, inference, fine-tuning, training, like all these things, right? And so we said, which of these things can be done better by a network? And we just started investing like up the AI stack in all the infrastructure with the idea that like, you're not going to have like an open AI that raises like billions of dollars to build like all 15 layers of the stack. What you're going to have are networks that do a very specific job to be done: data tagging, data training, data storage. And you're going to be able to put these things together like Legos so that you get a lot more competition at the app layer, right? Because sort of anybody's going to be able to tap into this full stack and put these things together like Legos and then develop sort of like the specific thing that they're targeting, which could be hyper-personalization. So we're just starting to see the app stuff come out now. I would say around the AI. So like Wayfinder is a group we invested in that sort of like has AI agents that can perform on-chain actions. It's incredible. It's like there's gaming applications, there's portfolio optimization. Definitely if you're interested in like where the bleeding edge around kind of like AI decentralized crypto apps, just check out Wayfinder as a good example.
Yeah, I agree with all of that. And maybe to add a different view, I think one of the compelling use cases is making the whole process simpler. If you can ask an AI agent on whatever application you're using, like how to actually do something. If I want to earn yield on a specific protocol, but right now I'm not sure, like what are the 4 steps I need to take to do it. On top of everything you already mentioned, I think that's one of the more near-term use cases that actually solves a pretty big problem for a lot of people.
So one of the visions I have for our crypto neobank is like today, what you can do is, unfortunately, it's not available for Americans, me included. So we're kind of shit out of luck. But in 5 minutes, you can KYC, you get a Swiss bank account and a globally accepted debit card anywhere in the world. That is a killer use case for anyone in the emerging markets who have trouble off ramping. More importantly, what exactly are we selling here? We're one level beyond a black card, right? You get this Swiss bank account. But more importantly, what's interesting is like in today's world, you have to go seek the bank to find products, right? But if you're a high net worth individual, the private wealth managers, private bankers come to you. So there's in a world where, okay, well, can we take AI and abstract away all the DeFi and on a daily, weekly basis, take those strategies and come to you with, hey, man, your portfolio looks like this, you're underperforming, overperforming, whatever. Based on your risk profile, would you be interested in these projects? One click, deploy. So I think that's like a real embedded use case that I hope our team moves towards. But I think that's more visualized in terms of like we can actually see AI in practice.
So from the protocol standpoint side, I think the AI it's a new UI. So even for me, so I'm not using the Google anymore. Actually, I'm using the ChatGPT instead of the Google. Think we don't need. I think currently, using the wallet or DEX is really hard for it, for the mass people. But we don't need to improve that. Maybe I think we should use, the AI or AI agent or the new AI. Think that'll be very important. So I think, I think really it's really hard to educate those kind of non-Dijon people or how to use the wallet. I think it's impossible. I think adaption the adaption for non-Dijon guy, the utilization or in adaption of the AI agent as the UI, just the UI, not the complicated things. That'll be very important, I believe, from the protocol side.
Cool. So that's about time for us right now. Thanks everyone for listening. And yeah, thanks to the panelists for sharing their views. It's definitely a really exciting time in the consumer app space. So yeah, looking forward to seeing where we're at this time next year. So thanks all and thank you.
Thank you.
Let's go.